Hey guys, what is going on? Welcome back to the channel. Again, I want to thank everyone for your support on the channel. All the viewers, all the subscribers, immensely appreciate the support. Today, I just quickly want to go over the latest dividend capture swing trade that I have set up with IRM Iron Mountain. I've detailed this trade over the last couple of videos, and for this video, I'd like to show you guys exactly how everything panned out and really how you can make money either by capturing the dividend alone with a swing trade or doing two swing trades, one before the dividend payment, going ahead and selling off before the ex-dividend date, the start of the ex-dividend date. You do not qualify for the dividend. You will not receive the dividend. But after the opening of trading on the ex-dividend date, when the stock does trend down, you can go ahead and buy back the stock. So if we take a look at the chart here, the ex-dividend date for IRM was on March 14th. And you can see here a very big drop in the price of the stock. That's all done automatically by the stock exchange. They take out of the price of the stock the exact amount of the dividend payment. It is a little bit off somewhat just because there is trading that happens pre-market as well as aftermarket on that transition from the day before the ex-dividend date and then the date of the ex-dividend date. And there's obviously trading going on as well after the market opens, but it always drops by at least the dividend amount. Yes, it can trend back up quickly, or it can continue trending down. And with IRM here, had the perfect scenario to do either of two types of trades. So the more traditional one would simply be buying the stock at any point during this time here or before, going ahead and then holding until the start of trading on the ex-dividend date. And you can see that big drop down here. You can also see that it does jump back up. So it goes from 33.22 or so. You can see that little bit of a spike there before the end of trading, before the ex-dividend date. It trends down here and then back up again. So theoretically, for my portfolio, for example, if we go down to the bottom, just to remind you guys of the trades here, I bought in at $32.92, as you can see on the bottom there, 100 shares, $32.92. So I bought the stock back in this area here, $32.92, and then you can see here it does drop down, but it also comes back up here. So essentially, I could sell it off at this point here, and not only capture the dividend, but make a few dollars on a swing trade as well. So that is the traditional dividend capture swing trade. You hold it through the ex-dividend date and then sell the stock off either on that same day or the day after, or it can be a few days, weeks, or even a couple months if you want to try to have better tax exposure by having your dividends qualified. But you can see how easy this is. You simply buy it before the ex-dividend date, hold until the trading on the ex-dividend date, and then go ahead and sell the stock off for the same amount or more. Ideally, you'd sell it off for a positive swing trade as well as capturing the dividend. So that's a traditional way of doing dividend capture swing trade. But another way to do it is by doing it via two swing trades. So again, I could have bought in here, and as you can see here, the stock started trending up before the ex-dividend date. Again, spiking up here right at the end of trading. So I could have done a swing trade here, bought in at $32.92, then sold off here. Then after the ex-dividend date opens, that big trough here, I could have went ahead and bought the stock back, let's say at $32.64, and then you can see it does trend back up. It usually does this, but not always. This is not going to always happen on a stock. And then go ahead and sell off here. So I made essentially two swing trades. A swing trade here to here, then went ahead, sold off, did not qualify for the dividend. I will not get the dividend payment, but bought back after the adjustment down, and then sold off on that same day. So two swing trades in place of a dividend capture swing trade. So two very different ways of using pretty much the same method. And the way I do this is that if I buy here and the stock does trend up quite a bit, I'll go ahead and lock in that swing trade. I'll lock in that capital gain. And then when the start of trading does open, and if it dips down below the original price that I bought it for over here, I'll go ahead and buy back with the hope that it starts trending back up again and then sell off again. So two swing trades without the dividend, or you can simply hold for the dividend and then try to sell off afterwards for a dividend capture swing trade. So I hope that makes sense. I know there was a few viewers on the last video wanting a little bit more exposure, or at least a little bit more detail on exactly what the two different trades are. What's the difference between the dividend capture plus swing trade or the 2 swing trades and not capturing the dividend. So that's kind of how it works out. You can buy here, hold through the ex-dividend date, capture the dividend, and then sell off at a later point for a positive swing trade and capturing the dividend. Again, to capture the dividend, you need to be holding the stock on the start of trading on the ex-dividend date. For this stock, on the 14th. Or what you can do is buy low here, expecting some investors to jump into the stock, trying to get the dividend. Go ahead and sell off in one swing trade. After it does hit the ex-dividend date and the stock is adjusted down, if you can buy it less than what the original price was over here, go ahead and do that. And then as the price trends up here, go ahead and sell off for another swing trade. So 2 swing trades in the place of a dividend capture plus swing trade. So I hope that clears up some confusion on my prior video. Again, if you guys have any questions about that, please let me know in the comment threads down below, and I'll do my best to get back to you guys as quickly as I can. So that is how, ideally, a dividend capture swing trade works out. And again, there are a number of ways that you can trade that. 2 swing trades or dividend capture plus swing trade. And what I elected to do, just because I do like this stock over the longer term, I do believe there is a buying opportunity here. I'm going to hold this for a little bit longer term. And another key point I want to make as well, if you go ahead and hold the stock for about 2 months or so, the details are a little bit more complicated, but if you hold the stock for 2 months before selling off after capturing the dividend, then you can go ahead and get a lower tax rate, typically 10 to 20% savings. So for this particular stock, I got about a $60 swing trade out of this trade. If I go ahead and hold the stock for 2 months, I'll make an extra $10 to $12 or so, about 15% or so, because of the preferred or qualified dividends that will be assessed at tax time for the dividend. If you go ahead and buy and sell, you're going to have just a normal, ordinary income tax rate for your dividends. But if you go ahead and hold the stock for about 2 months or so, again, it's a little bit more complicated. I have put out videos talking about the preferred tax rates for dividends. You can go ahead and save yourself 10 to 20% depending on your ordinary income tax bracket. And I can go into that in a little bit more detail as well if there is enough interest. So just wanted to quickly go over the swing trade here. It worked out perfectly for IRM here, Iron Mountain. And again, I decided not to get out of the stock. I had the opportunity here. And if you take a look on the bottom here, the original plan was to jump out of the stock at $33 here. I had a number of these particular sells here. Actually, it would be after the ex-dividend date. So these top 2 here at $33. As you can see on the graph up on top here, it did not quite hit that on the 14th. It did hit it on the 15th, but decided to go ahead and hold this for the longer term. I do like this as a buy and hold stock with a great dividend yield on the bottom here, 5.93%. So let me know if you guys also jumped into Iron Mountain. Did you guys jump out? Did you do a dividend capture with the swing trade, or did you do 2 swing trades and made some capital there? Let me know either way. Always interested to hear your guys' experiences as well. So not to make the video too long, I guess I'll end it here. Again, if you guys have any questions about this video, other videos, please let me know in the comment threads down below. Again, I do apologize that my responses last week or so have been delayed. Definitely will try to get back to you guys quicker. And again, if you guys have any other types of stocks like this, please let me know. I'm always interested to see what you guys are trading with a dividend capture swing trading strategy. So yeah, not to make the video too long, I'll kind of end it here, and we'll see you guys next time.